Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us discuss about final accounts of banking company. In this video, we are going to talk about the introduction of final account of banking company. So, the banking companies in India are governed by Banking Regulation Act 1949. Every banking company should prepare a balance sheet and profit and loss account on 31st March of each year in the form set out in the third schedule under section 29 of Banking Regulation Act 1949. It means that every banking company should prepare a balance sheet and profit and loss account on 31st March of each year in a specific form. This form is given in the section 29 of Banking Regulation Act 1949. So, the balance sheet of a banking company is prepared in Form A and profit and loss account of banking company is prepared in the Form B of the third schedule in vertical form. So you can see down, Form A is about balance sheet. Balance sheet as on 31st March every year. So you can see the format of balance sheet. In this format, the banking company has to prepare the balance sheet. Particulars, schedule number, year as on, amount as on 31st March current year, and the second column is as on 31st March amount of previous year. Now you see the balance sheet of a banking company is divided into three parts. First is capital and liabilities, second is asset, and third is contingent liabilities, that is the external liabilities of the banking company. So in capital and liabilities, total there are 5 schedules. In assets there are 6 schedules. So first, capital and liabilities. So total 5 schedules deals with the liabilities of the banking company. In capital and liability, first schedule is capital, schedule number 1. Schedule number 2 is reserves and surplus. Schedule number 3 is deposit. Schedule number 4 is borrowing. And schedule number 5 is other liabilities and provision. And total of all these 5 schedules will be written over here. After capital and liability, next is assets. Now assets, total there are 6 schedules, that means schedule number 6 to schedule number 11 they belongs to assets of the banking company. So first is cash and balance with Reserve Bank of India, schedule number 6, and whatever the total of the schedule number 6 is there, you will write it in the current year column. Next, balance with bank and money at call and short notice, schedule number 7. Next is schedule number 8, investment. Schedule number 8, investment. Advances, schedule number 9. Fixed asset, schedule number 10. Other asset, schedule number 11. So total of all these 6 schedule of assets will be written in this column. Next is the last schedule number 12, that is other liabilities. It means contingent liabilities. It is like these liabilities are external for the bank on the events of happening, and bills for collection. So this is the format of balance sheet of the banking company. So every banking company in India, they have to prepare the balance sheet in this format. The format is given in Form A. I will repeat again, the balance sheet is divided into 3 parts. Capital and liabilities, total 5 schedules are of liabilities, then asset, total 6 schedules, and other liabilities, that is contingent liabilities, schedule number 12. Now next is the banking company has to prepare profit and loss account. So profit and loss account is given in Form B. Profit and loss account for the year ended on 31st March particular year. Now this profit and loss account is classified or divided into 4 parts. First will be income, second is expenditure, third is profit and loss account, and last is appropriation. Appropriation means allocation of the profit of the bank. Now in income there are total 2 schedules, that is interest earned, schedule number 13, other income, schedule number 14. So total of income will be written in the amount column. Next is expenditure. In expenditure there are total 2 schedule, and last is the provision and contingency. It doesn't have any schedule number. So expenditure, in expenditure, in interest expanded, that is schedule number 15, operating expenses, schedule number 16, and provision and contingency, and last will be the total of expenditure. Next is profit and loss. In profit and loss, the net profit or loss for the current year, and how we will get the profit or the loss for the current year. If suppose income is more than expenditure, it will be the profit for the current year. If expenditures are more than income, it will be loss for the current year. So you have to write down the difference between income and expenditure in the amount column. Next is net profit or loss brought forward. This net profit or loss brought forward means the profit or loss of the last year of the bank. It is to be noted down in the amount column. Next, the total of profit and loss, write it. Next is this appropriation is the important part of profit and loss account. Now what is appropriation? Appropriation means the allocation of the profit of the bank. So whatever is the profit of the bank, it is to be transferred, or how the profit is allocated of the profit, it is to be shown in the appropriation. Now first is what? Transfer to statutory reserve. Now what is transfer to statutory reserve? See, as per Banking Regulation Act 1949, every banking company has to transfer 25% of the profit to statutory reserve. Next, transfer to other reserve, like other reserves like general reserves and so on. So the profit is to be transferred to other reserve. Next, transfer to government or proposed dividend, and last will be the balance carried over to balance sheet and the total of the profit and loss account. So this is the format of profit and loss account. So in this way you have to prepare, or the banking company has to prepare, the balance sheet and profit and loss account. Students who are studying in TYBCOM, for the academic purpose they have to prepare the final account of banking company in this format. First will be Form A, balance sheet. Second is Form B, profit and loss account. Now after preparing the profit and loss account, they have to prepare the schedules. So separate schedules are to be prepared. So total 16 schedules the students have to prepare. So first schedule is schedule number 1, capital. So in this schedule, authorized capital, issued capital, subscribed capital, called up capital, and if any calls of unpaid or calls in arrears are there, it is to be deducted from called up capital, and if any forfeited shares are there, it is to be added, and the total of the amount, it is to be noted in this balance sheet in the amount column. Next schedule is schedule number 2, reserves and surplus. In reserves and surplus, what is to be recorded under schedule number 2 separately? In this format, in balance sheet, only the total amount of the schedule will be recorded in the format, but the working of each schedule, it is to be shown separately. So in reserves and surplus, first is statutory reserve. Okay, so see here, 25% of the statutory reserve of the profit and loss, it is to be transferred in statutory reserve. Then capital reserve, share premium, revenue and other reserve, and balance of the profit and loss account. So whatever the balance is, balance of the profit and loss account, it is to be transferred to balance sheet. So you have to note down in schedule number 2, and at last the total of this schedule number 2, it is to be noted down in the balance sheet format. After reserves and surplus, next schedule is schedule number 2, deposit. Now deposit is liability for the bank. Why? Because bank accepts the deposit from the public or from the customers, and it is to be paid again to the customer. That's why it is deposit, it is liability for the bank. So under deposit in schedule number 3, bank accept various types of deposit like demand deposit, saving deposit, fixed deposit, current deposit, and if there are any deposit of the branches in India and deposit of the branches outside India, it is to be recorded in schedule number 3. And last, the total. After schedule number 3, next schedule is schedule number 4, borrowings. Now borrowings, bank borrows money from other institutions like Reserve Bank of India or other banks or institutions. So it is to be noted down in the schedule number 4. And last is schedule number 5, other liabilities and provision. So total 5 schedules belongs to liability side. So in schedule number 5, in other liabilities and provision, the particulars will be bills payable, inter-office adjustment, interest accrued, others like provisions for taxation, rebate on bill discounted, unclaimed dividend will come under schedule number 5, that is other liabilities and provisions. Now in inter-office adjustment means what? Branch adjustment. See, the one bank will have many branches, so if there is inter-branch adjustment, okay, if it is given in the question, suppose the inter-branch adjustment amount is given in the credit side, it is to be recorded in schedule number 5. And if the balance of inter-office adjustment is given in asset side, if it is given in debit side, it is to be recorded in asset side. Okay, so these were the 5 schedules of capital and liabilities. Next is schedule number 6, which belongs to the assets of the company. So schedule number 6 is cash and balance with Reserve Bank of India. Now every bank has to keep some cash with themselves, as well as they have to keep some balance with Reserve Bank of India. So how much balance they are keeping with the Reserve Bank of India, it is to be down in schedule number 6. So cash in hand including the foreign currency notes, then balance with Reserve Bank of India like in current account or in other account. So the total of schedule number 6, it is to be noted down in form A in this column, in the amount column. Next is schedule number 7, that is balance with bank and money at call and short notice. So whatever the balance with other banks other than the bank, if bank is having the balance with other banks, it is to be noted down or recorded in schedule number 7, and money at call and short notice. Next is schedule number 8, investment. So investments in India, whether the bank is invested the money in government securities, then in shares, debentures, or outside the India, so it is to be recorded in schedule number 8. Next is schedule number 9, advances. Advances means the money which the bank has given to the customer in the form of loan. So this is asset for the bank. Loans are asset for the bank. Why? Because when they are giving the money to the customer, customers are going to return that money again to the bank in the form of EMI. So the money is coming in. That is the asset for the bank. So in schedule number 9, the particulars or the items will be recorded like bills purchased and discount, cash credit, overdraft, loan repayable on demand, and if there is any adjustment related to the cash credit, overdraft, loan repayable on demand, so it is to be deducted from this value. Then term loan, secured by tangible asset, unsecured, advances in India, advances outside India, it is to be recorded in schedule number 9. Next is schedule number 10, fixed asset. So fixed asset, what are the fixed assets the bank is having? It is to be recorded in schedule number 10, like premises, other fixed assets like furnitures and fixtures, it is to be recorded in schedule number 10. Next is schedule number 11, other asset. Now in other assets other than the fixed asset, what are the assets the bank is having? It is to be recorded in schedule number 11, like inter-office adjustment. So I said the liability side that if the inter-office adjustment balance is given in the debit side, it is to be recorded in other asset, that is schedule number 11. If the inter-office adjustment balance is in the credit balance, if the balance is in credit form, it is to be recorded in schedule number 5. Then interest accrued, if the taxes are paid in advance, tax deducted at source, if there are any stock of stationery and stamp, it is to be recorded in schedule number 11. Then non-banking asset acquired in the satisfaction of claim and other like silver, whatever, it is to be recorded in schedule number 11. So these were the schedules belong to the asset side of the balance sheet. Next is schedule number 12, contingent liabilities. So these particulars are to be recorded under contingent liabilities. Now next we'll move to the schedules of profit and loss account. So in income side, total there are 2 schedules, that is schedule number 13, interest earned, and schedule number 14, other income. So interest earned. So interest earned, the bank is going to earn the interest on the advances given to the customers. So interest, discount on advances, bill, interest on income, interest on balance with Reserve Bank of India and other interbank fund. So whatever interest is earned, the total of the interest, that is the total of the schedule number 13, so it is to be posted in the profit and loss account balance column here. The total of interest earned will be written over here. Next is schedule number 14, that is other income. So bank can earn other income in the form of commission, exchange, brokerage, in the form of profit on sale on investment, on revaluation of asset, then profit on exchange transaction, profit on sale on land and buildings and other asset, or miscellaneous income the bank can earn in the other income. Okay, so these all records will come in schedule number 14. Next is schedule number 15 and schedule number 16. So schedule number 15 and 16 belongs to the expenditure side of the profit and loss account. So schedule number 15 is interest expanded. So interest expanded means the interest the bank is given to the customer on the deposit. So interest on deposit, interest on deposit, like it can be term deposit, demand deposit, etc. So whatever the interest is given to the customer, it is to be recorded in schedule number 15. Next is schedule number 16, that is operating expenses. So these are some expenses which bank is going to have on daily basis, like rent, taxes, lighting, printing, stationery, advertisement, etc. So these are the operating expenses which is to be recorded in schedule number 16. So the total of 15 and 16 is to be written in the balance sheet, in the profit and loss account. So after comparing the income and expenditure, if income is more than expenditure, it will be the profit. So profit is to be written here. And if expenditure is more than income, it means it is loss, it is to be written here. And then the total you have to do, and the final balance profit and loss account will be the amount will be written here. Okay, so in this way the profit and loss account and balance sheet is prepared. So this is the format of balance sheet and profit and loss account along with the total 16 schedules of the banking company. So I hope you have understood today's session. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.